Bring that ass back like a boom, 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 boom.
Happy Sunday, everyone. This is Supernova, and you're with Boom Traders Weekly Overview, October 30th, week 43. Let's get going. Now, the first one, we have a disclaimer now. Financial products, including but not limited to futures, options, securities, forex, crypto, etc., involving substantial risk of loss and are not suitable for everyone. Past results are not indicative of future performance. The information found in this video does not constitute investment advice or solicitation to buy or short sell a financial instrument. This video is for educational purposes only. So, session overview, we have the models, market price action, internals, notes, sentiment, seasonality, and a summary. So let's get it going with our market models. The overall market model is buy caution. We haven't moved it since last week. And the reason being is you will see we are still below the 50-day moving average on NASDAQ, and S&P 500 is hitting key resistance zones. IWM is moving in a channel formation, and the Dow Jones Industrial just closed right above the 200-day moving average. So we think that we might be getting a little bit extended before the FOMC meeting next week. Therefore, we are still remaining on buy caution. Breakout model on caution. There are some stocks that are working insanely well, and there are some stocks that are not. Right now, you can see, if you have been following our signals and our ideas, that most of the breakouts are happening in sectors like energy, biotechnology, and pretty much the entire market is driven by the Dow Jones Industrial right now, which is not ideal situation. That's why we still have our breakout model on caution. And as far as the 3 time frames we're looking for, long term, think months, we're still on negative. Midterm, we moved it to neutral, and short term remains positive. Now, let's go get some information from the market price action and internals. So here's the standard thinkorswim setup that I'm running for the 3 indices, starting with the S&P 500, and I switched a little bit in terms of indicators. So what I really want you to see right here at the bottom, this is the histogram of the net new highs, net new lows. And you can see right here that through this entire rally from the bottom right here, we have not had a single day with net new highs being higher than net new lows. Of course, you can see there is a trend. Now, if you draw in a trend line, you can see there is a trend. Definitely, we are decreasing in terms of the difference between the two, but we're still not in a healthy market by any means. And we are also seeing the resistance from this gap right here until gap. We closed right above it, which is pretty much a painted close. So let's see, I'm expecting on Monday to have some surprises for everybody that thinks we're hitting the 200-day moving average. And even so, even if we are, notice that the slope of the 200-day moving average is still downwards. The slope of the 50-day moving average, this yellow line, is still pointing downwards. So we are definitely not out of the woods again. QQQ, which is NASDAQ, has been the weakest of all 4 indices, and I'll also show you a brief chart of Dow Jones. But if you look at NASDAQ, we're still not above this rally point right here. We're forming something like a head and shoulders. If you think about this being the left shoulder, this being the head, this being the right shoulder right now. We're still below the 50, which is pointing downwards. We're still below the 200-day, obviously, still pointing downwards. Net highs, net lows, still on the negative side right here. Although we still see this trend as with the S&P 500, they are decreasing. But nevertheless, still looks pretty ominous. And you saw stocks like Meta and Amazon and Google and Microsoft just dropping out of the sky. So QQQ is definitely the weakest part of the indices. IWM moved above the 50, actually 50 held as a resistance, tried to test it right here. We're now moving in a channel formation, probably going to hit the 200-day moving average But just remember that the upper line of the channel is usually a resistance zone, so buying right here is not advisable. You're probably looking for buys or pullbacks. Although if you notice at the volume right here, we have, this is 1, 2, 3, 4, 6 consecutive days of positive volume, which is really good. And in a healthy market situation, you want to see small caps um, being bought. So this shows some strength in the market. And now if you just look at Dow Jones, just show you the index, we just moved past the 200 day. It's just been insane. This is DJX is the same thing like SPX um, for S&P 500. So this is what I have for the indices. As I said, here is a channel. Be careful. S&P 500 hitting resistance right here, right about the 50. But also, this is the COVID trend line right here, and I can actually maximize this and show you on a weekly chart. This is the COVID low, and you can see there's like this trend line build. So we're right here trying to move above it. And now let's get to some of the market indicators that I'm looking for to give me a direction of whether we are going up or down. And you can see all my oscillators right here, including the Zweig bread thrust and the McClellan oscillator are very, very oversold. McClellan hitting plus 300. Overbought, I'm sorry. McClellan hitting at 300. Zweig bread thrust hitting 60, 61.5 is the overbought situation of this indicator. My two um, oscillators based on advanced decline volume and issues are also hitting the upward channels of their overbought line. So just be careful. If you are continuously buying, just be careful on that one. Now, the next thing that I want to talk about is the internals, and let's get back to Thinkorswim. Put call ratio has been dropping. Now the average is 0.9, still elevated, still above the 0.75 that I want to see for market returning to neutrality. So they are still buying put protection. New highs, new lows. You saw with the histograms below the S&P 500 and the NASDAQ, we are still on negative, haven't moved really on positive since August for both indices. VIX, it's a good thing VIX is dropping, but also remember that VIX is now, scalping this lower side of the Bollinger Band, which might lead to a reversion back to the mean. Same thing with the S&P 500 top band. And if we're looking at the up-down issues for all four stock exchanges, like the New York Stock Exchange, NASDAQ, the Root, and the Dow Jones, you can definitely see which one is leading. You can see that this one is on a positive note, the moving average and the issues definitely higher here on Dow Jones Industrial, and this is the advanced decline issues. You can see Dow Jones last 6 days, 1, 2, 3, 4, 5, 6 days of positive action right here, whereas S&P 500, NASDAQ's been a bit weaker, as I told you, but definitely you can see right here on the bars, the Dow Jones definitely the highest performing index of them all. And one more thing that we have right here, this is the stocks above their 50-day moving average on the S&P 500. We have 62% of stocks above their respective 50-day moving average and 36% of stocks above their respective 200-day moving average. So market conditions are improving. However, as you will see in just a second in my notes, we have to be careful because the FOMC meeting is coming on the 2nd of November. We have 4 upcoming days in the next week that have important macro information. So this can sway the market in different directions. Another thing that is very important to note, I know how many of you are interested in the options and how options are positioning, but they can be telling a lot of things about this market, and including this rally on Friday was driven by a lot of same-day expiration options, but options remain the same with upper resistance still at about 394 the S&P 500, but 3,800 for SPX. So this hasn't really moved. And on Friday, we saw an elevated put volume buying which means that option players are preparing for next week, maybe buying some put protection. We'll see how this one goes. So really nothing has changed so much. And one more thing that you should be aware is that if the markets are okay, if they're healthy, stocks should move before the indices. And this is probably not exactly what we saw last week. We saw, yes, a lot of stocks did break out, but the indices actually made bigger advancements than most stocks, which was a little bit strange, especially Dow Jones Industrial. So we have to be a little bit careful here. Not all stocks are participating. Although stock participation is moving up. But again, probably the thing that should drive you through your trading next week is the first thing is to scale back a little bit because of these important macro numbers that are coming out, because of the FOMC meeting. And also, one thing I want to note here is be driven by what the stocks are doing, not so much by what the indices. I know that pretty much everybody's watching the indices and how the indices are forming and the support and resistance zones. I went through them very briefly today because I think that you need to focus on the stocks at hand, the strong stocks, and if there are setups, you need to start trying them. So one more thing I have here the probabilities for 75 point rate hike. We have 81.3% for now, and 50% rate hike, 18.7%. This is of today, which is Sunday. So the meeting is on the 2nd of November, which should come. 2nd of November is on Wednesday. The meeting is on Wednesday, so be very careful with your trading, and I would scale back some large positions probably by Tuesday afternoon, just to be on the safe side. Now let's go and see what sentiment's doing. Bulls versus bears. Definitely bullishness is picking up. And remember that this is the American Association of Individual Investors. They go 1 week back, so this is for the 26th of October, the week ending last week, basically. So this week will be higher in terms of bullishness when they release their data. CNN Fear and Greed Index moved from neutral to greed. You can see 61, and 1 year ago we were at 64. So we're moving like 1 week slower than last year. When I did the video previous week, you saw that the fear and greed index last year at the same time was on greed. It was on neutral last week, but now we switched to greed. So everything falls in line with the cycle work that I'll show you the chart in just a second. As far as Bitcoin is concerned, it moved through the $20,000 range, back again. Then now we have our fear and greed index moving from extreme fear to fear at 34 out of 100. And as I said, looking at seasonality, we were right here when I showed you the graph. Now we're moving higher, which definitely coincides with what we have in terms of cycle work. So I'm trying to make this very short and very sweet. In summary, the models are on buy caution, setups more appearing, markets moving higher. Dow is leading, QQQ or NASDAQ is definitely lagging. Put volumes lowering, volatility is lowering. Although, as I said, there was a lot of put buying on Friday. And in terms of some risks, definitely recession fears, Fed hikes, inflation, which is the driver of all things. And that's why it's important to remember that Feds don't like inflation for now, so a fast running stock market is definitely not something they want to see. And as far as setups, right here at the bottom I said try some. That was last week. I will remain on this try some for this week with, again, note Wednesday FOMC meeting, volatility is to be expected, so scale back on your positions before Wednesday. See how the market's going after the meeting, Wednesday, Thursday maybe, and then start actively putting exposure on back again. So I hope you find this information helpful. That's the only goal that we actually have, is trying to help you with your trading so you can make right and educated decision about the investments that you will be making in this really treacherous markets as of now. Please like and subscribe to our YouTube channel and come and visit us in Discord. We have an amazing community of traders. You can bounce ideas off each other and find solutions to this market, as I said. So hope to see you there. If not, next week, next video. There'll be one more video coming up with the watch list for the week. So I'll see you in that video in just a little bit, and then I hope to see you on Discord. Till then, trade safely, stay safe, and bye-bye.